Hello, in today's video I will walk you through the proper way to trade an overextension and I will demonstrate to you why creating an advanced trading plan is crucial. Some major lessons will be learned, but first let me tell you that I put in a lot of work in today's video and the amount of value I am trying to give you is something many people would put into a course and charge money for. So please make sure you like and subscribe so I know it is worth giving away my knowledge for free. And if something is unclear and there are any questions, I will answer them in the comment section below. Before I go into the example, let me give you a generic idea about trading the overextension. When you trade an overextension, you are practically fading an unsustainable move, meaning that you are going against the short-term trend. The consistent way to trade this would be if the short-term overextension is in the opposite direction of the longer-term time frame. If that happens, by fading the short-term overextension, you position yourself in the same direction as the longer-term time frame. The result of that is that you practically take a pullback trade on the longer-term time frame while receiving a very good entry point. But something that is best to be avoided by beginners is fading stocks where both the long term and short term are overextending in the same direction. Even though there might be a big potential there, this is usually a dead trap for beginners and it is very hard to trade. If you decide to fade such a scenario, please make sure that this overextension is at least running into a major support or resistance level. And the best thing would be not to get involved at all. This is SOFI in 2021. It was ranging for a while, but then started breaking out on its highest volume. I will make a detailed video about this setup, but for now just keep in mind that anytime you see a daily candle like this, it is important to watch the stock in the upcoming days, and if it trades around the key levels of that initial strong day, be very focused. Because sometimes an opportunity might be present. Before I show you the intraday extension, I wanted to show you something very important for the trade. Notice 1850 selling much more than he shows on the offer, and this is the day after the breakout. You already know that I refer to this as an unusual hold on the offer, and this information that I receive on day 2 is going to be crucial for the trade that I take on day 3. Now a little bit of context about the bigger picture of the stock. It is breaking out and in an uptrend. 1850 was resistance day 1, then it was resistance day 2, but became support after breaking, and now day 3 it is overextending into that 1850 support level. Notice 1850 now holding the beat. This is not the only reason I am long, just as well as the move into 1850 is not the only reason I am long. There is a combination of too many variables, so I cannot skip the trade. The daily is breaking out and some major levels were already discovered, meaning the 1850 level. Also, intraday ranges of the candles are increasing. This and the fact that volume is spiking are both indications of possible capitulation and a bottom. Something else that is important is that price is away from view up. The ATR was 90 cents at that time, so we are roughly 60% of an ATR away from view up and almost a whole ATR away from the daily high. It is important to quantify what an extension means to you. Many people use an extension away from view up measured in ATRs, and roughly one ATR away from view up is something like a breakpoint. Earlier, I said that I would talk about the importance of a detailed trading plan. This is one of the biggest lessons I have to learn from this one, and I hope you won't repeat my mistakes. I had an amazing entry, basically buying the lowest tick for the days to come, yet I treat the trade as a scalp, even though there are a ton of reasons to hold the trade for longer. This is due to a lack of a trading plan and not treating the trade as the type of trade it really is. There were so many variables that suggested that this could be a swing trade and I should hold it for longer, yet I treated it as a scalp trade. At the time of recording this trade, I was just starting to read the tape, and something very dangerous when reading the tape is that you might forget the bigger picture and exit a really good trade without having reasons to exit just because you saw something on the tape and you thought it was significant. You should be careful not to just keep churning size when in reality the stock is just ticking up and down and not doing anything. And this trade is an example of me doing exactly that. Even though I had an amazing entry, 80% of my executions were random. There is a significant event on the tape later that I will show, but such event is just a reason to exit a partial of your position and not the whole position. Since entering the trade, nothing significant has happened, yet I have already exited 60% of my position. In a proper trade to hold, I would have exited 20% when I saw the important event that I'm going to show you in just a little bit, and then I would have just held the rest for either a move up to VWAP and possibly a multi-day move, or just getting stopped out below 1850. Now finally there is a significant event. 1868 is holding the offer and it is an unusual hold on the offer. In reality, this should be a reason to exit at least a partial of your position, but what I did here was not just exit my whole position, I even flipped short, forgetting all the variables that were telling me to go long and stay long. So the lessons I take for myself are that I should always have a concrete trading plan and I should always know what my reasons to exit are going to be. I should know the type of trade I am taking, and different trades have different reasons to exit. Now before I go and do a quick summary of everything important about this trade and this situation in general, I want to point the last interesting moment on the tape, and this is the big bit here that is pressing against the unusual hold. I don't have anything specific to say about it, but in general when you see something like this, it is worth it to see what the reaction of the price is. Now I will proceed into summing up the variables that made the trade good, the mistakes that ruined it for me, as well as the main lessons I learned. First, I will repeat the generic way to go about an extension. You want the extension to be happening in the context of a longer term timeframe pullback, so fading it positions you in the direction of the trend. If it's not happening in that context, make sure it is at least moving into a major support or resistance level. If it's happening in fresh territories, just be disciplined and skip the trade. Second, let me repeat the variables of this specific trade. First, the stock is breaking out on huge volume on the daily. Then day 1 and day 2 revealed a major level, the 1850 level. Then the tape confirmed that the level had indeed turned into support. And also the extension is into a major support level in the context of a bigger time frame pullback. The extension has all of the textbook characteristics. Ranges are increasing and also volume is spiking. And lastly, going against the extension put me in a position where I was aligned with the breakout. Third, my mistakes. In one sentence, my mistake was I did not have a detailed trading plan. More specifically, this means that at the time of entering the trade, I had no predefined reasons to exit and I did not know what type of trade I was taking. 80% of my executions were random, and also I did not treat the trade as a trade to hold as I should have. I treated it as a scalp trade and all the variables were suggesting a trade to hold. And lastly, the lessons to be learned here are that you should always have a detailed trading plan before entering, and you should always know whether you are taking a scalp trade or a trade to hold. Different types of trades require different trade management techniques. Tape reading is useful, but you should always be aware of its dangers. Don't get too focused on the level 2 and then as a result ignore the bigger picture because you saw something on the tape. The tape is mostly a scalping tool, so if you take a trade to hold, be aware that you want to see bigger reasons to exit. Thanks for watching. If something is unclear, leave a comment and I will answer it. And in the future I will do a detailed video about reasons to exit. Bye for now.